So you started earning money. You've got extra money now. So you told yourself, I'm gonna save all my money. You just started putting all your money in the savings account, right? And you're like, this is great. This is fantastic. No, because I mean, saving money and having emergency funds is important, right? But you can stash away too much money, right? I mean, it's not the best financial strategy. It is possible to have too much money sitting in a savings account because it's earning little to no interest. So, for those who already have like a decent emergency fund, there's going to be other things you can do with your extra cash, right? There is a danger of having too much in savings. Keeping money in a savings account is typically a good thing to do. But savings accounts, while they are a safe place to store your extra money and it will provide you an easy way to make withdrawals, right? It's just not the smartest choice with your extra money. Now, insurance from the FDIC covers up to about $250,000 per person per account type, right? Means that your savings are protected by the federal government if your bank fails. Now, the bigger danger of having too much money sitting in a savings account, assuming you don't pass a $250,000 threshold, is largely one of opportunity cost. By keeping too much of your spare money in an account that generates little interest, you miss out on the opportunity to grow your money, right? According to bank rate data, the average savings account paid about 7%, right, interest as of the week of March 31st, right? Now, you don't have to settle for such minuscule returns, right? There are high yield accounts that pay more. Well, right now, some of the best ones pay around 0.5%, and right, but that rate is still low, right? Especially relatively low for money that you won't need for a number of years. Instead of keeping that money in a savings account, you could direct it into investments with greater growth and income potential, like a mutual fund, bonds, stocks, ETFs, stuff like that. Now, these investments are riskier than a savings account, but they offer higher potential rewards. Maintaining a solid balance in your savings account to help you weather a financial storm is important, but you don't want to keep too much of your money in the account and risk missing out on extra money you could be making by investing, right? So one of the things we want to talk about is one of the things you need to do is calculate the right savings threshold for you, right? Because it's important to consider how much money you want to save and have set aside for an emergency. Make sure your savings account balance reaches that threshold before you start investing extra money in, say, like an investment account, right? Now, you also want to make sure that your savings balance doesn't go too far past that threshold, right? If you don't have an emergency fund yet, starting small is a good move. Create small goals, saving $100, $500, or $1,000. Work your way up from there, right? Maintaining this savings cushion will enable you to cover unexpected expenses like a car repair or a medical bill. It also gives you a cash cushion to deal with a loss of income due to a job loss. Financial coach and writer Katie Oliker says the amount you want to sock away in your emergency fund depends on your risk tolerance and personal situation, right? Once you have about 3 months of expenses built up, you need to ask yourself how much more you feel comfortable with, right? Is it 6 months, 9 months, 12 months? A lot of this answer has to do with how comfortable you are with the risk of losing income, as well as how long you think you're going to need to stretch your emergency fund if needed. For example, if you're part of a dual income household, right, you might be able to get away with a smaller emergency fund if you can rely on your partner's income if you lose your job. But if you're the sole breadwinner of your household, you might want to have a larger emergency fund. When the next thing to talk about is going to be maximizing that money, that extra cash, right? Because once you've built your emergency fund, you need to try to get the most value out of that money. While many save in, like a personal savings account for easy access for emergencies, there are other options to make the best of your savings for easy access to funds. Move your savings to a high interest savings account. It's definitely going to help increase your yield, but it's not the best. One of the first places to look, though, for higher yield accounts is going to be online banks. Right? They tend to offer some of the highest interest rates on savings accounts and might not have minimum balances or charge monthly fees. For those who have a lot of spare cash and a long time before they will need access to cash, investing in stocks, right, which they've historically generated a lot better returns than bonds or cash, is something you really need to consider. So one of the last things that I want to talk about, which is a big one, is you need to determine your goals, your financial goals, right, guys? Your financial goals, they're gonna have just a huge impact on how much money you want to set aside for, say, lower yielding cash or investments with greater growth potential, stocks, or greater growth potential these days of stuff like NFTs. Whatever it is that you want to invest in, that's going to have a much better potential of making you more money. As an example, if you want to buy like, let's say a really large purchase, right? Like a home or a car. These are really large purchases, right? And if you want to do this in the near future, now it makes sense to have a large amount of money in a savings account. The last thing you want is to save for a down payment by investing your money in the stock market, only to have your investments plummet in value right when you're starting your house hunt, right? Like, that would be terrible. You're like, oh, $10,000, down payment. I'm going to put it in the stock market for it to grow. And then you look 2 days later and all of a sudden it's $5,000, right? You'd be devastated, right? Now, for other long-term goals like retirement, which could be just decades away, investing is the way to go, right? You should probably use these tax advantaged retirement accounts to invest once you've built your emergency fund. That's going to be one of the better accounts to invest your money in. And once you've reached your goals, consider investing extra savings either by contributing more through an employer sponsored plan like a 401k, a 403b, right? Or funding a Roth or traditional IRA. Now, every dollar you invest, it's going to compound, right? And the sooner you start padding your investment accounts, the harder your money will work for you, right? This is why you always hear people start investing early, because the earlier you start investing, the more it'll compound, the more it grows, right? The bigger the number. So what does this boil down to? What's the bottom line here? Well, having an emergency fund is important for everyone, right? It can help you handle unexpected expenses and deal with situations like losing your job. So if you're fortunate enough to be able to save a lot, it's worth considering the opportunity cost of having too much money in your bank account, like in your savings account, right? Instead, you might want to look at investing that money, right? Doing something with that money to give you a much better return. I hope you guys got a lot out of this video. Hope you enjoyed it. If you liked it, hit that thumbs up button. If you're not subscribed to the channel, go ahead and subscribe to the channel. So I'll see you guys in the next video. Y'all be safe.